Boy, oh boy, we are finally maybe going to get rates below 7%. There was all kinds of headlines. Rates dipped a little bit. We're going to see if we finally broke the 7% trend and what's likely to happen. I did an article or a video last week on the inventory getting over 1.2 million homes over the next couple years, which means that's going to keep the market softer, right? If you get increased supply, you get demand staying low, then obviously that is going to keep the market softer, but lower rates would definitely get in the way of that. And then Zillow came out and looked at the market as a whole, and then we're going to look in Florida, and are we a buyer's market, seller's market? And of course, it's going to be hyper local to where you at. Hey everyone, this is Rayce Robinson, your favorite Florida mortgage broker. And let's take a look at rates. Did they actually fall below 7%? Well, the answer is sort of. You can see here, this is Mortgage News Daily. Lots of different places you can look at rates. Be careful on the internet because everyone is advertising unicorn rates or their marketing funnels. I like to step on the same scale week after week to kind of get the trend. And you can see that the market ended on Friday. It's around 7%. Why did we get this? These news articles? You can see right here, we hit 6.99%. And then on Friday shot back up. And I've done many videos just kind of saying we are kind of looping right around this 7%. For me, the worst rate would be 6.5% because this unleashes demand but doesn't really get a lot of supply. And we're going to take a look at why the supply is still locked up, but there is finally some improvement. And when we look at the Fed, this is the next meeting, 92% chance that we are not going to cut rates. We go to May, still 73% chance we're not going to cut rates. And you get into June. June's the first meeting or the Fed funds meeting where they've cut the Fed funds rate, which will influence rates. So we are not looking at any relief for cutting the Fed funds rate really till this summer, June and maybe July. Well, some good news is we've talked a lot about the lock-in effect. We have so many people with so low rates. I've had many arguments over the last few years. I've seen another big YouTuber talking about the upcoming market crash, and my response is always the same. Where are we going to get enough inventory to create that kind of market correction in 2007 and 8, which I was around? Massive short sales, nobody had equity, and nobody had super low rates. Now you have the biggest part of the market sitting with really low rates, a ton of equity, and if you look at all the data, not really having that much financial trouble. Yes, foreclosures and some of those things are going up, but they're coming off, all-time lows, or some of the lows have been a long, long time. And so of course it's going to go up. I really like this article from Redfin where they say 17% of homeowners with mortgages now have an interest rate of at least 6%, the highest nearly in a decade. And what they're talking about, if you look at this chart, in 2021, 9% of people had rates above 6%. That is almost doubled to 17%. Actually, you can see here it was at 7 in 2022. Also, at this 5 point, let's call it below, between 5 and 6%, we have another 10%. So we have 27% or 25% of the market now having rates above 6%. Why is that important? Because that diminishes the lock-in effect as more and more people have higher rates. It makes it easier for those people down the road to refinance, hopefully, if rates do fall. No one knows for sure. But it does allow them to maybe buy a different house or whatever. But the people with these really low rates, they got to double or triple their payment. And looking at that, still, this always amazes me. You have 18% of the people have rates below 4.99. You have 34% of the people having rates below 3.99. And you have 21% of people having rates below 3%. So when you take 21, 34, and 18, you have almost 75% of the market with rates so low, they just have a hard time justifying trading in that equity. And that's, or I say the equity for a payment that's going to double, that's what has kept the housing market, even we got to 8%, from having a major price correction, which you think would happen with really low demand and really high rates. Now, Zillow also came out with this article talking about what is a buyer's market, seller's market, and kind of rating the entire US and then breaking it down by area. We're going to look at their map, but a score of 70 means a strong seller's market, all the way down to a score of 27, which is a strong buyer's market. Key number here is kind of neutral, is that 40 to 55 range. And you look at this heat map, as they call it, you can kind of get a feel really almost everywhere in this kind of neutral area, with some areas still, having increases in prices and more of a strong seller's market, and then other areas, really cold. Now, when we zoom into Florida, they don't really have all of Florida here, but you can see that Orlando is 45, so that's right in that neutral range. But when you go to Punta Gorda and places like that, if I can find it on the map here, or I guess that's Naples, Punta Gorda at 33. And then last, kind of the overall ranking here, the 200 or the top markets with the top 10 markets with the hottest market, you can see I've listed here. None of these in Florida. When we look at the top 10 coldest markets, we have not Punta Gorda, but Cape Coral in Florida, and Punta Gorda is pretty much on this list, probably in the top 15. That's all important because Florida as a state is obviously affected by every place in Florida, but where your market is, it's going to be different. And I can tell you here in Oviedo or Central Florida, it is definitely neutral, but the houses that are priced right, that are the ones that you would want, are probably going to have multiple offers if you're a buyer. And if you're a real estate agent, you got to have people fully pre-approved, ready to go. Maybe you can close quickly. They're not doing anything that would make their offer not attractive. And we are spending a lot of time on pre-approvals right now. We do a 2-page pre-approval with a summary so that the agent, whoever's reviewing an offer, can see just how strong that is. And if you're an agent and you're looking at this year, it's going to feel very similar to last year for the most part. And a really telling chart that I like showing is this market chart of who's doing what in each market. And I really just focused on Florida here. So this is amazing to me. Top 1% of agents, if you're a Florida real estate agent, is doing 23% of the market. That is crazy. That means the top 1% is dominating a big part of the market. When you go to the top 5%, that means they're doing 40% of the market. So that means if you're not in the top 5%, 95% of the market is chasing 60% of the market that's available. And if you're not in the top 20%, which they're doing the top 70%, that means 80% of the people are trying to get the last 30% of that business. That just means a lot of agents are either struggling or knocking it out of the park. There's very little in the middle. What do you need to do is set up a plan to move you to that next percentage. When you sit down and, we do brainstorms, we do a lot of trainings in my office, which you should attend. If you're not on our list, get on our list. We go over daily success plans and different things dealing with homeowners insurance issues. And right now we are doing one-on-one Zoom meetings with about 3 or 4 or 5 agents and going over all the first-time home buyer programs and how to use them to get some buyers off the fence, and more importantly, to get more sales in 2025. So if you're interested, message me and I'll get you on the next one. If you have any questions on this, the market, where things are headed, this year's going to feel very similar to last year. I believe as we get more towards the end of the year, we're going to have a tailwind. This is Rayce Robinson, your favorite Florida mortgage broker. Have a great day, great week. I'll talk to you soon.